What's good, all my trader and investor homies? It's your boy Kevin. This is Touchdown Trades. I'm your trading BFF, your stock market bestie. The setup's looking a little different because I'm out of town, currently on vacation, but the market never sleeps, baby. We all know that the penny stock market has been hot. So even though I'm on vacation, I gotta come at you guys. I gotta bring you guys these valuable videos because the penny stock market has been on fire. So in today's video, we're gonna talk about my top 3 penny stocks to invest in right now. However, we're also going to be discussing a very important topic, and that is pump and dumps and how to spot a pump and dump, because we've been seeing a lot of them in the penny stock world over the last couple of weeks. We saw KXIN make a 1,000% move from like $1 share to over $14 per share, and then it gave it all back. And then we saw WEI, a 500% runner in under just a day or so, and then it gave it all back. And then today, EVK, another pump and dump. So in today's video, we're going to talk about how to spot pump and dumps and not get trapped. Because a lot of new traders, investors see these penny stocks making big moves and they want to buy. They don't want to miss out. But they end up buying at the highs and getting stuck in the dump on the way down. And I don't want to see any new investor get caught in these pump and dumps because it's no fun. We've all been there. But the penny stock world does offer opportunities, and we can't be scared to take a chance to attack these high growth penny stocks. We want to invest in penny stocks with opportunity, long-term opportunity, not pump and dumps that are going to make a big move one day and then the next day give it all back. So let's talk about it. Let's talk about my top 3 penny stocks to invest in right now. But before we get started, go ahead and like the button for me, as these videos do take a long time to make, a lot of effort, research, due diligence go into these videos. So like the button for me. If you're not a subscriber, consider subscribing, all that good stuff. Just go down there and start pressing buttons. All right, so we got 3 high growth penny stocks to talk about. And as always, let's secure the bag by making smart investments and sound trades. Let's get it, baby. What's good, all my trader and investor homies? In today's video, we're going to be talking about 3 penny stocks with massive potential. They're going to the moon. But before we get started, we're going to talk about a very important topic in the penny stock world, and that is how to spot a pump and dump and how not to get trapped in it. If you want to find the best broker right now, check out the link in the description. And when you sign up with Webull, which just launched its brand new desktop platform, which is absolutely awesome. I'm probably going to do a video on the platform, how to set it up and how to get started with it. But you can get up to 3 free stocks valued up to $1,600 when you sign up with my link in the description and open a new account with Webull and fund it with $100. Can't beat it. 3 free stocks up to $1,600. You deposit $100, you can get $100 back in just free stocks. Can't beat it. Check out that link in the bio. All right, so we've been seeing pump and dumps left and right in the penny stock investing world over the last few weeks. One of the first ones to pop up on my radar was this KIXN. And how do we know it's a pump and dump? If it makes a massive move in one day, it shouldn't give back 50% of the move if it's a valid move, right? Well, this KXIN ran up over 1,000% from the sub $2 area over to $12 per share, and then now it's pulled back, giving up almost the entirety of the move, and it's currently trading at $4 per share, right? So if you bought up here, you're like, oh, it's up 400% on the day, I'm going to buy at $8, and then it ran to $12. You didn't take any profit. Now you're down 50%, and it's trading under $4 per share. That can really hurt newer traders and investors, but it doesn't have to happen to you because it's easy to spot. Another classic example is this WEI. You're trading under $1. You have a run up within one day to almost $10 per share. Next day, it's trading back under $2. And the most recent example is this EVK, Everglory International Group, trading at about $1. You have pre-market push to over $4. Pull back pre-market, and then intraday you run up back to $6, and it's currently giving it back. It's currently in the dump phase of the move. So these are very easy to spot, and the way I spot them is by looking at relative volume. What the relative volume is telling you is how much the average volume is compared to today's volume, right? So this EVK is a prime example of a pump and dump. It typically only trades 40,000 shares of volume. Today it's traded over 130 million shares of volume. I'd say that's not looking very good for the people who are buying over $5, $6 a share, because just the increase in volume. You have typical volume of 40,000 shares. You're trading 130 million shares. Typically, the pump and dump candidates have a small float, meaning there's not that many shares available to be traded. Maybe only 4 or 5 million. So obviously, if you're doing 130 million shares of volume, there's going to be a volatile move. And once that move happens and it's trading at a price of $5 or $6, there's no more buyers left. What happens? Short sellers come into the name and they crash it back down. There's too much selling involved. People are taking profits who bought at $4, and short sellers are selling as well. It just creates selling panic and the stock plummets. So one way to easily spot this is there a recent PR and is the relative volume too crazy? Are day trading chat rooms pumping this up? This is caused, back in the day, pump and dumps were caused by PR firms. The company themselves, the publicly traded company, would hire a PR firm to release sketchy press releases. And then the stock would run up, and then the company would raise capital, and it would dump back down. Now the penny stocks, they don't have to hire a PR firm because the day trading chat rooms do it for them. They'll release a PR. The day trading chat room doesn't care about the news. They tell their members to buy this stock. Everybody piles in. The stock runs up. The company will either raise capital or insiders will start dumping their shares and the stock plummets back down. So I guarantee you'll see the day trading chat rooms post on their YouTube channels this EVK that they traded it, that they made $20,000 on it. And over the next 2 days, it'll drop. And every investor who bought above $4 a share is going to lose their face on this stock. So just be cautious over the next few weeks, months. If you see a stock up over 100% and it's trading at crazy relative volume, it's very likely a pump and dump. All right, let's jump into my top 3 penny stocks to invest in right now. Ticker number 1 is going to be the CBAT. CBAT Energy Technology is a Chinese-based battery company, sells lithium-ion batteries. Particularly, my interest is in their battery sales in the electric vehicle market. This is a Chinese battery company, and they sell to Chinese EV manufacturers and American EV manufacturers. Now, I'm not too familiar with this company. This is more of a swing trade versus an investment for me because I haven't been able to do the research, the due diligence on the company because I can't find any good investor news or investor presentations, or I can't read the investor relations page. It's in Chinese. But I do know that Chinese stocks are hot, especially in the Chinese EV market. So I'm willing to take a swing trade on this stock, and I like the chart setup. So I'm basing the swing trade more on the technical analysis side of things, the money coming into the Chinese EV market. So I'm risking the trade on that more so the company itself. Also, the technical analysis is very nice. We're pulling back right now. We had a nice run up on the chart. On the daily chart, we ran up from $1 all the way to $5. And we're pulling back under $3, testing the 260 support. So I'm going to risk a 2-3 week swing trade on that 260 area and look for this thing to head back up over $4 a share. Ticker number 2, GPRO GoPro, baby. This stock has made a crazy move. This is one we talked about in the past. We caught this move right here. I talked about GoPro transitioning from just being a regular camera company to a software as a service company. And I like the chart. I like that we're getting a nice little pullback. And I'm going to be investing in this baby long term on the next pullback down towards this 550 support area. So let's talk about why I want to invest in GoPro long term. GoPro is transitioning from just being an old camera company to where they're now transitioning to becoming a software as a service company. I love software as a service because you get reoccurring monthly revenue that can give you a foundation to build and grow off of. So the camera sales really don't matter as much as the software subscriptions, in my opinion. Big institutional investors agreed with me, and GoPro ran up 32% in one day after they announced that their subscription numbers were better than initially expected. Last time we talked about GoPro, we talked about them targeting more than just the outdoor crowd. GoPro traditionally has been the action camera crowd who is targeting the outdoor people who use it for fishing videos, kayaking, you need a waterproof camera, that type of thing, biking, hiking, mountain climbing, that type of crowd. Now they're targeting the vloggers as well, because this Hero 9 Black has the vlogging mod where you can add a microphone to it, you can add a light to it. So the vlogging crowd is going to increase GoPro's market share in the camera space and allow them to sell their software as a service and get that monthly reoccurring revenue. I am not interested, even though the Hero 9 is a really nice camera and they're targeting the vloggers, that's not why I'm in love with GoPro Stock. I'm in love with GoPro Stock because their software is a service. They're offering a cloud data storage service as well as camera insurance. And I think they can expand on this, maybe add a video editing service on top of this cloud storage. It's only $4 a month right now. If you add a video editing service and can charge $15 a month, GoPro's revenue increases substantially, exponentially. And that's very speculative on my part, but I think the risk is there. The risk-reward ratio is obviously there. If we take a look at GoPro's daily chart, I want a pullback into this 575 area and to invest in that area. And I'm looking for GoPro to break back up and rocket back up towards $10 a share. Because if we look at the weekly chart, GoPro has been absolutely decimated. I mean decimated post IPO. It ran up to over $80 a share and dropped like a rock because it was just a camera company, and we all know what happens to camera companies. Look at Kodak. It just doesn't work out well. But now they're transitioning. They realize they have to be more than a camera company, and they're starting to become a software as a service company on top of selling cameras. I'm putting a 12-month price target of $10 per share on GoPro Stock. Ticker number 3 is going to be a Chinese EV auto manufacturer, that is KNDI, Candytex Group. This is a Chinese company that manufactures what I consider to be the Chinese version of a smart car. Remember those little smart cars that were popular 5, 6, 7, 8 years ago that kind of fell off the map? Well, this KNDI manufactures a car that looks like that but is EV. And we all know China, the big urban cities in China are very crowded, but the Chinese middle class is growing and more people are able to afford to buy a car, and the Chinese are willing to buy EV, maybe even more so than Americans right now. So I want to be involved in as many Chinese EV companies as possible. We've all seen NIO stock take off. This KNDI is going to allow us to get exposure at ground level with a small penny stock EV company that I believe has tons of growth potential. Take a look at their website and we can see some of the cars that they manufacture. It looks like they have a little sedan right here, or a little crossover SUV, CRV looking thing. Here is the smart car looking EV car that I'm talking about. It is what I believe to be the future of this company, because China is a really crowded place and you need a small car and able to get around these cities that are very crowded, and it'll help reduce the footprint of your average Chinese person. Here's another look at a little car they manufacture. And this is not a company that doesn't have any sales to base your investment off of. This is a company that has a market cap of $400 million with sales of $119 million last year. So the price to sales ratio isn't horrible, and I expect those numbers to grow as the Chinese EV rate grows substantially over the next few years. So I want to get positioned in this company, and I think the Chinese EV market's about to take off. I'm going to look for this stock to pull back down. We're currently trading over $7 a share, and I want to see it head back down towards $6. We have a lot of support at $6. So I'm going to look for a pullback before investing in this KNDI. I think it has tons of potential. We can see just a couple months ago it ran up to over $17.50 a share. So I'm going to look for this thing to break out, pull back, buy the dip, and then sell into that rip back towards all-time highs. I think this KNDI has tons of growth potential over the next 24 months or so. I think it breaks those prior all-time highs. So I'm putting a 24-month price target of all-time highs, or $17 per share. And I think this thing really breaks out. I hope you guys got something from the video. If you did, go ahead and like the button for me. If you're not yet a subscriber, what are you doing? Hit that subscribe button. Until next time, I'll catch you on the flip side. Peace.